Hello, my name is Mayanka. I am accounts and finance trainer from Uplatz. Today, we will discuss the topic of pension. We will discuss pension under the head of salary. We will discuss what is the amount of pension and the exemption which is available in the respect of pension. The amount of pension which is received is also taxable under the head of salary. The amount of pension which is received is also taxable under the head of salary. So there are there are the provisions. So we will discuss the provision about the taxability of pension. And we will also discuss exemptions in the respect of pension. So now we will start our video, and in this video we will discuss pension. The pension. The meaning of the pension is the amount of the payment which is received. The payment which is received by the employee. When there is any payment which is received from the government or from any company or from any of the employer, when there is any employee, he has received any amount from the government, from the company, or from the any of the employer in the consideration of past his services, in the consideration of past services, and the amount and such amount is payable by the government employee or by the any company after his retirement, then such amount will be known as pension. Then such amount will be known as pension. The amount which is payable by government, by any company or by any employer to the employee after his period of service. After the period of service means after the retirement. After the retirement, any of the amount which is payable by the government, payable by the company, or payable by the any of the employer, then such amount will be known as then such amount will be known as pension. Then such amount will be known as pension. For the example, Mr. Ram, he is working in a government organization. He is working in a government organization. During the service, during the service, he received salary 50,000 rupees per month. So such amount is taxable as salary in the previous year in which it is received. After the retirement, after the retirement, he received Ram received Ram received 5 lakh rupees as pension, as pension. Then this is the amount. This is the amount which is received by Ram. This is an amount which is received by Ram from the government organization. From the government organization after the retirement. When he will retire, when he is retired, he received 5 lakh rupees from the government organization. Then such amount will be known as pension. Such amount will be known as pension. Mr. Ram received 5 lakh rupees as the amount of pension. As the amount of pension. Pension is of two types. There are two types of pension. There are two types of pension, commuted pension or uncommuted pension. There are two type of pensions. There are two type of pension: commuted pension and the no and the uncommuted pension. First, we will discuss meaning of these pensions. Commuted pension. What is the commuted pension or what is the uncommuted pension? First, uncommuted pension. Uncommuted pension. Uncommuted pension is a pension which is received periodically. Means the amount of the pension which is received periodically. It is received periodically where the amount of the pension is received by the employee periodically, then it will be known as uncommuted pension. Such amount of the pension, such amount of commuted pension, such amount of uncommuted pension is taxable in the hands of both employee, whether he is government employee or whether he is non-government employee. Uncommuted pension is a pension which is received periodically and it is taxable in the hands of all the employees, whether he is government employee, whether he is non-government employee, means such amount of pension will be taxable in the hands of all the employees. So uncommuted pension is taxable in the hands of all employees. Commuted pension. What is the meaning of commuted pension? Commuted pension means interchange. Commuted pension means the amount of the pension which is taken by computing the whole or the part of pension. Commuted pension means lump sum amount. Commuted pension means the lump sum amount which is taken by commuting the whole or part of the pension. In the case of commuted pension, the person convert their future right to receive into the lump sum amount which is receivable immediately. Commuted pension is a pension which is received by the person in lump sum amount, which is received by the person in the lump sum amount as a part or as the whole of the pension, as the part of the pension or as the whole of the pension. Is that when there is any person he wants to take such a pension immediately, then then he will convert his commuted pension into the lump sum amount and he will take it immediately. We will discuss these two types by the way of example. For the example, Mr. A, he is working. He is working in an organization. After the retirement, after the retirement, he receive, he will receive after the retirement as per the condition, means as per the agreement. After the retirement, he will receive 5 lakh rupees. 5 years after the retirement. 5 years after the retirement, he will receive 5 lakh. He will receive 5 lakh. So in this case, the when after the 5 year he will receive 5 lakh. So such amount is known as, or such pension is known as uncommuted pension. Uncommuted pension. Such amount is known as uncommuted pension because it is received after the period of 5 years. Received by A after 5 years. after 5 years. Next example, Mr. A, he is working in an organization. In an organization, 5 years after the retirement, he will receive 5 lakh rupees. He will receive 5 lakh rupees after the period of 5 years. But he immediately need. But he immediately need. So he so he wants to recover such amount immediately. He wants to recover such amount immediately. If he recovers such amount immediately, he will receive 2,50,000. Immediate. Immediate, he will receive 2,50,000. So such 2,50,000 is to be known as commuted pension. He will receive only 2,50,000, then it will be known as commuted pension. 5 lakh, if he will receive, if he will receive after 5 years, then it will be known as uncommuted pension. Or if he will receive immediately, if he want to take it immediately, then he will receive 2,50,000 rupees as lump sum amount, as lump sum amount, and it will be known as commuted pension. It will be known as commuted pension. So, by the way of such example, we have understand what is commuted pension or what is uncommuted pension. What is commuted pension or what is uncommuted pension? Commuted pension, in the case of commuted pension, if the person is required the money, then he can convert it. He can convert the uncommuted pension into the commuted pension, and he can take the money immediately. But he will receive some lump sum money, not full money. He will receive some lump sum money. Now, we will discuss an example. Suppose a person is entitled to receive a pension of rupees 10,000 rupees per month. For example, he will receive 10,000 rupees per month for the rest of his life. For the rest of his life. Or he has another option. He may commute 1/4, means 25% of his amount, and he will get and he will get 1,50,000 rupees as lump sum, and he will get 1,50,000 as lump sum. After commutation, his pension will now be balanced 75,000 of 10,000 rupees per, means 7,500 rupees per month. 7,500 rupees per month means he will receive some lump sum amount. He will receive some lump sum amount. Now, the pension will be, now after the commutation, the pension will be 7,500 rupees per month for the rest of the life. For the rest of the life. If there is no commitment, if there is no commutation, then the pension will be 10,000 rupees per month. Then the pension will be 10,000 rupees per month for the rest of the life. For the rest of the life. Now, we will discuss exemption in the respect of commuted pension. In our previous slides, we have discussed what is the meaning of pension, what is the meaning of pension, and the type of pension. The type of pension and the amount of pension will be taxable in the hands of employee. The amount of the pension which is received by the employee, from the government, from the employer, or from the company, that it will be taxable in the hands of employee. It will be taxable, in the hands of employee. It will be taxable in the hands of employee. Now, we will discuss section 10, subsection 10A. Section 10, subsection 10A of Income Tax Act. exemption in the respect of commuted pension. We will discuss exemption in the respect of commuted pension. If the amount, if there is any amount received as commuted pension, then what amount will be accepted or what amount will be taxable. We will discuss it. According to the provision of section 10, subsection 10A, according to the provision of section 10, subsection 10A, if there is any payment which is received in the respect of commuted pension, then it will be accepted. If there is any employee, he has received, or there is any person, he has received any amount as commuted pension, then it will be exempted. It will be exempted, but subject to certain conditions. But there are certain conditions. But there are certain conditions. So now we will discuss. Now we will discuss the treatment of commuted pension. Means we will discuss how it will be taxable or how it will be exempted. How the commuted pension will be taxable or it will be exempted. So now we will discuss. Number one, employee of central government, employee of local authority, employee of statutory corporation, or the employee of or the member of civil service or defense service. Number one, if there is any person who is the employee of government, if there is any central government employee, if there is any local authority employee, if there is any statutory corporation employee, if there is the if he is the employee of he is the member of civil service or the defense service, then the amount of the commuted pension which is received by such a person will be fully exempted from tax. Is that if there is any commuted pension which is received by any government employee, by any government employee, or by the employee of local authority, by the employee of a statutory corporation, or by the member of civil service, or by the member of defense service, then such amount will be exempted. Then such a commuted pension will be exempted from tax. Such pension will be exempted from tax. It will not be taxable in the hands of such employee. It will not be taxable in the hands of such employee. Point two, in the case of other employee. In the case of other employee, normally the commuted pension is exempted in the hands of government employee. It is exempted in the hands of government employee. Now we will discuss taxation in the respect of other employees. The commuted pension which is received by the other employees, the commuted pension which is received by the other employee other than point A, then it will be exempted, but to the extent of, means the amount will be exempted but under the limit. Not full amount will be exempted, it will be exempted to the extent of certain limit. In the case of government employee, or in the case of point A, total fully amount of commuted pension will be exempted. Fully amount will be exempted, but in the case of other employee, it will be exempted, but up to the certain limit. But up to the certain limit. The limit is number one, if the employee is in receipt of gratuity also. If such employee, if such employee is in receipt of gratuity also, means such employee will also receive the amount of gratuity. So in this case, exemption will be 1/3 of amount of pension which would be received by him. which would be received by him, is that the exemption will be one third of such a computed pension. One third of such a computed pension. One third of such a computed pension. In the case when the employee is in the receipt of gratuity, also means such employee will receive the amount of gratuity also. In this case, the amount of exemption will be one third of amount of pension which would have been received had we computed the whole of the pension. The whole of the pension, one third of computed pension received. If the employee does not receive any gratuity, if the employee does not receive any gratuity, then the exemption will be 1/2, means half of the amount of computed pension, half of the amount of pension which would have been received had he committed the whole of the pension, means one, means half of the amount of pension, half of the amount of pension. If he will receive the gratuity, then it will be one third of the pension, or if he will not receive pension, then one half, matlab one two, sorry, one two means half of the amount of pension, half of the amount of pension. In the case of government employee, in the case of government employee, the amount of the pension will be fully exempted. The amount of the commuted pension will be fully exempted in the case of government employee, means in the case of the employee of central government, employee of any defense service, member of any civil service, or member of any defense service, employee of any local authority. So the amount of the commuted pension will be fully exempted. It will be fully exempted. In the case of other employees, in the case of other employees, in the case of other employee, if such employee he will receive gratuity, then the exemption will be one third of the amount of pension, one third of the amount of pension. And if the employee will not receive, he does not receive any gratuity, then half of amount of pension, half amount of pension, half amount of pension. There are some notes before the discussion, the other points. There are some notes in the respect of sub computed pension. The judges of the Supreme Court and the judges of the High Court, in the case of judges of the Supreme Court and the judges of High Court, they are fully exempted from the computed pension because they are the government employee. Because they are the government employee, or and in the case of government employee, the commuted pension will be fully accepted. The commuted pension will be fully exempted. Number second, if any of the amount of commuted pension, if any of the amount of commuted pension is received by any of the individual, if any individual he has received any amount of commuted pension out of annuity plan, out of annuity plan of the life insurance corporation, out of annuity plans of LIC, from the fund which is set up by that corporation, which is set up by LIC, then it will be exempted. Is that if there is any individual, he has received any computed pension, and such pension is received out of annuity plan, and such annuity plan is set up by, it is funded by LIC, then it will also be exempted. Then it will also be exempted. Then it will also be accepted. The pension, computed pension of Supreme Court judge and the High Court judge will be fully exempted. And if there is any computed pension which is received by the individual out of his annuity plan, out of the annuity plan, and such annuity plan is funded by the LIC, then it will also be accepted. It will also be accepted. So we will discuss the provision of pension by the way of a flow chart. by the way of chart or by the way of diagram, so that we can discuss such concept. We can discuss such concept by a single diagram. Pension. There are two types of pension. The pension are classified into two parts: commuted pension and the uncommuted pension. Pension is classified into two parts: commuted pension and the uncommuted pension. Commuted pension. Commuted pension. Employee of central government. In the case of commuted pension, the commuted pension will be fully exempted. The commuted pension will be fully exempted under section 10, subsection 10E, clause 1. The amount of commuted pension will be exempted, will be fully exempted. It will be fully exempted under section 10, subsection 10A, clause 1, in the hands of, or when it is received by, when such a commuted pension is received by, it is received by the employee of central government. It is received by the employee of central government, the employee of local authority, the employee of statutory corporation. It is received by the employee of statutory corporation. It is received by member of civil service or the member of defense service. If such amount of commuted pension is received by employee of central government, employee of local authority, employee of statutory corporation, member of civil service or member of defense service, then it will be fully exempted. Then it will be fully exempted under section 10, subsection 10A, clause 1. It will be fully exempted. In the case of other employee, in the case of other employee, in the case of other employee, if the employee receive the amount of gratuity also, if the employee is receive the gratuity also, then the exemption will be one third of the pension. One third of the pension. It will be calculated as one third into commuted pension, which is received, plus commutation percentage into 100. And the amount which will be arise by this formula will be exempted, and the balance amount will be taxable. And the balance amount will be taxable. And the balance amount will be taxable, one third. And if the employee does not receive any gratuity, if the employee does not receive any gratuity, then the exemption will be half of the pension, half of the commuted pension, which is received plus commutation into 100. Into 100, we will discuss it by the way of example, so that we can understand how to calculate such amount. We can understand how to calculate such amount. Example: Mr. Sagar, he was retired on 1st October 2020. Mr. Sagar, he was retired on 1st October 2020. He is receiving 5,000 rupees per month. He is receiving 5,000 rupees per month as the amount of pension. He will receive 5,000 rupees per month as pension. On 1st February 2021, he committed 60% of his pension and he received 3 lakh rupees as commuted pension. As on 1st February 2021, he committed 60% of his pension and he received 3 lakh rupees as commuted pension. Means the lump sum amount he received 3 lakh rupees. The lump sum amount which is received is 3 lakh rupees. So on the basis of this, we are required to calculate taxable pension. We are required to calculate taxable pension. When the Sagar is government employee, when the Sagar is government employee. Number two, when he is a private employee. When he is a private employee and he will receive 5 lakh rupees as gratuity at the time of his retirement. Number one point, when he is a government employee. Number two, he is a private employee, but he will receive 5 lakh rupees as gratuity at the time of retirement. Number third point, he is a private employee and he does not receive any amount of gratuity. So in these 3 points, we are required to calculate taxable amount of pension. We are required to calculate taxable amount of pension. Taxable amount of pension. Number one, when he is the government employee. When he is the government employee. In the case of government employee, commuted amount of pension is fully exempted. Commuted amount of pension is fully exempted. It is fully exempted. Commuted amount of pension. He is a government employee. In the first point, he is a government employee. He is a government employee. In the case of commuted, commuted pension. He is government employee. So in the case of commuted pension, total amount is exempted. Total amount. The amount, computed amount of pension is 3 lakh rupees. So it is fully exempted. It is fully exempted. So there we will discuss Sagar. He is a government employee. He received commuted pension. 3 lakh rupees. He received commuted pension 3 lakh rupees and such amount, it is a commuted pension as per the provision when the employee is a government employee. He is a government employee, then commuted pension will be fully exempted. It is fully exempted under section 10, subsection 10A, subsection 1. Subsection I. It is fully exempted. It is fully exempted when he is the government employee. Commuted pension will be fully exempted, but uncommuted pension will be taxable. Uncommuted pension will be taxable because uncommuted pension will be taxable in the case of both employee. In the case of both employee. Uncommuted pension is 5,000 rupees per month. 5,000 rupees per month. So, in the financial year, the amount of uncommuted pension will be 5,000 rupees from October, November, December, January. Because in the month of February, he has taken some lump sum amount as commuted pension. So, October, November, December, and January. 4 months, it will be 20,000 rupees. It will be 20,000 rupees. And for the balance period for the 2, February and March, it will be 5,000 into 40% because 60% of the pension is taken by him as commuted pension, for the period of for the period of 2 months. So it is 4,000 rupees. So the total amount is 24,000 rupees. It will be taxable. It will be taxable. It will be taxable in the hands of Sagar when he is a government employee. When he is a government employee, so the taxable amount will be taxable pension will be only 24,000 rupees. Taxable pension will be only 24,000 rupees when he is a government employee. When the Sagar is a government employee. When the Sagar is a government employee, then 24,000 rupees will be taxable. 24,000 rupees will be taxable. The taxable amount will be 24,000 rupees. Next case. Next case is when he is a private employee. When he is a private employee and he has received 5 lakh rupees as gratuity. When he is a private employee. When he is a private employee. When he is a private employee and he has received the amount of gratuity. He has received the amount of gratuity. So in this case, Sagar, he is a private employee. He is a private employee. He has received gratuity. He received the amount of gratuity 5 lakh. So in this case, the amount of pension which is taxable pension, taxable amount of pension will be number 1, uncommitted pension. It will be 24,000. 24,000, it is fully taxable. 24,000 is properly taxable, and committed pension and the amount of committed pension will be calculated by the way of formula. Means it will be 1/3. It will be 1/3 of the committed pension plus amount received. Is that it is 1/3 of commuted pension, the pension which is received, divided by communications into 100, is that it will be 1/3 of 3 lakh rupees. 1/3 of 3 lakh rupees. 1/3 of 3 lakh rupees divided by 60% because it is commuted. This is the portion of commuted. It is 1/3 of 3 lakh rupees. 1/3 of 3 lakh rupees divided by 60%. It is commuted into 100. Divided by 60% into 100. So it will be, so into 100, sorry, into 100. So it will be, commuted pension is 3 lakh. So exempted amount will be this. This is the exempted amount. The exempted amount will be 1/3 of 3 lakh. 1/3 of 3 lakh. One third of 3 lakh, which is 1 lakh. It is 1 lakh divided by 60%. Divided by 60%. So it will be, so it will be 166,667. So it will be 1,667. This is the exempted amount, the amount which will be exempt. So the taxable amount will be, so the taxable amount will be 1,33,000, 1,33,333 rupees. 1,33,000, 1,33,333 rupees. So the total taxable amount will be this plus this. Total taxable amount will be 1,57,333. 1,57,333. When he is a government employee, when he is a government employee and he is received 5 lakh rupees as the amount of gratuity, and he received 5 lakh rupees as the amount of gratuity, as the amount of gratuity. When he is a government employee and he received 5 lakh rupees as the amount of gratuity. Third point, when he is government employee and he does not receive, and he does not receive any amount of gratuity, and he is a private employee and he, in point B, he received 5,000 rupees, and the third point is he is a private employee and he did not receive any amount of gratuity. The heading is wrong. He is a private employee and he does not receive, and he does not receive any amount of gratuity. He does not receive any amount of gratuity. So in this case, the amount of taxable pension, the amount of taxable pension will be as follows. It will be as follows. Sagar, he is a non-government employee. He is an employee of private company. He is an employee of private company. And he receive gratuity 0. He is not receiving the amount of gratuity. So the taxable pension will be uncommuted. Uncommuted pension is 24,000. It is same in all these cases. All the three cases, it is same. But the commuted pension, it is one half. It is half of commuted, divided by 60% into 100. It is 60% of 100, means it will be 2,50,000, means exempted amount is 2,50,000. So that total committed amount is 3 lakh minus 2 lakh rupees exempt. 2,50,000 rupees is exempted. So 50,000 rupees will be taxable. 50,000 will be taxable in the case of commuted, or in the case of uncommuted 24,000. So the total amount which is taxable, as pension when he is not a government employee. He is not a government employee and he is not receiving any amount of gratuity. So the total amount of pension, which will be taxable is 74,000 rupees. The total amount of pension is 74,000 rupees. The total amount of pension is 74,000 4,000 rupees. So on the basis of such example, we have understand the full provision of we have understand the full provision which is relating to the pension. First, we have discussed pension. What is the pension? The pension is an amount which is received by the employee from the government or from the company or from any of the employees. It is received. It is received in the consideration of past services, and it is received after the retirement. It is received after the retirement, and we have discussed type of pension. There are two type of pension: commuted pension and uncommuted pension. We have discussed commuted pension and the uncommuted pension in the detailed form, and we have discussed that uncommuted pension is fully taxable in each of the cases. Means whether government employee, whether non-government employee, it is taxable in both cases. It is taxable in both cases. Both cases. The commuted pension, it is exempted, but up to the certain limits. Up to the certain limits. So we have discussed a proper example, and we have also discussed exemptions relating to the commuted pension, because uncommuted pension is fully taxable, so there is no question of exemption, and the commuted pension is taxable and it is also exempted, but up to the certain limits. So we have discussed it. We have discussed the exemption properly, and we have also discussed a proper example. We have discussed it in the summary form, and we have discussed a proper example so that we can easily understand how to calculate the taxable amount of pension, taxable amount of pension, taxable amount of commuted pension or uncommuted pension. So on the basis of such class, we have discussed how to calculate the amount of taxable pension. Thank you so much for watching this video. There are some other relevant provisions just like allowances, perquisites, and gratuity, and many other provisions of service, sorry, of salary. Kindly consider all the videos of the salary topic so that you can properly understand each and every concept of salary, and you can easily calculate the salary, the amount of income which is taxable under the head of salary. Thank you so much for watching this video. Okay, bye bye and have a nice day.